Hello, everyone, and welcome to this edition of Investing and Trading Live, episode 793. Today is August 2nd, Tuesday to be exact, and we have some nice moves in the markets here. As is in the title, the United States has been downgraded from AAA on their long-term rating to AA+. And markets really reacting to that. So in the volatility increasing, which is good for trading and investing, especially options if you're looking to collect premium. But the market overall has dropped. I mean, the market as of right now, it's about 9:33 Central Time, down about 1% on the market, gapping down pretty good and dropping down 1%. Hit at the lows from last, I believe it was Thursday, when the market dropped substantially after the Fed raised interest rates on Wednesday, and then Thursday it dropped, probably 1.5%, if I'm not mistaken. So that being said, let's get into the show here. We're going to obviously not give any recommendations. This is just particularly for entertainment purposes only, but let's look at the S&P 500 to start out with. We look at the SPY for that. As I mentioned, gapping down, dropping down to the lows from Thursday. So major weakness in the market there. We still have that demand zone down at the 430 area that is still valid. So that could be a potential target if this does continue to drop. But I still see strength in this market, but my opinion doesn't matter really. That being said, let's get into the diamonds. The DIA, Dow Jones Industrial Average. This one gapping down as well and hitting the lows from not quite the lows of last Thursday at this time at about 354.11 per share. The NASDAQ showing a little bit more, down about 1.7% on the day. The Dow was only down about 0.6 as of right now. So the NASDAQ taking the brunt of the fall here. Gold and silver also down. So not the safe haven like what they say. Silver is actually down about 2.25%, continuing the slump from yesterday. Opening at the highs, just going straight down yesterday. Same today, going straight down today. Down overall the past 2 days. This week, we're down about almost 4% on silver. So not looking too hot for the silver market. Same thing with gold, down 0.77%. From yesterday on the week, we're down roughly about 1.5%. So not quite as much of a drop, but still, in essence, it's still a drop in the market. So correlating with the stock market. That being said, the U.S. dollar is inversely correlated and is showing that today. The U.S. dollar is up 0.7%, still showing major strength here from July 14th, the lows from July 14th. So it is coming up to a high from the 6th. So we'll continue to monitor that as it goes up there. It is a demand zone there from the 103 to 103.6, 360 area. So it has been touched and tested twice, but there is a couple of supply zones. I meant supply, sorry about that. There is a couple of supply zones above that as well. So this could continue to go up, but we're going to see a struggle if this does continue to go up here moving forward. So the U.S. dollar inversely correlated with the stock market, which it normally is. Had to take a sip of coffee there. It's early morning here in Minnesota. You got to have some coffee, even though it's going to be about 92 degrees today. A beautiful day here in sunny Minneapolis, as some people say. Every time I go on an airplane, they call it Minneapolis. It's actually Minneapolis, for those of you that aren't quite sure about that. Bitcoin down 1.3% on the day. XRP, let's not even pay attention to that. And Ethereum down 1.4%. We had some notable stocks to peek at. Disney being one of them. I've been talking about an options play on this one for a while, down about 1.7%. Really slumping from the highs of yesterday down to where it's at right now, down about 2.4%. So Disney not looking too hot. Still like our options play. We're still well above our strike price. Hopefully it gets to that strike price and just expires, but we would like to get some premium before the 9th here. when they have earnings. As we know, earnings will be a volatile time for Walt Disney. Okay, AMC down 2.64%, so not looking hot there. It's been pretty volatile there. We should get our other computer out here as we're talking and see if we can see some volatility spikes in some of the options plays, see if we can collect any premium. We'll peek at that here as we continue on here. I'll get that ready as we go. But let's look at, so this whole news on the U.S., the U.S. debt, the long-term rating from AAA to AA plus. So I was reading it this morning, and Janet Yellen was talking about it's based off old data, blah, blah, blah. Says the move does not change what Americans, investors, and all people around the world already know, that the Treasury security remain the world's preeminent, safe, and liquid asset, and that the American economy is fundamentally strong. So that's what Janet Yellen said here. Yes, I think it was this morning. So the last time the U.S. was downgraded by the S&P was 2011, and a lot of the talks is the debt ceiling. Is a lot of the talks what's been happening here. So yeah, so that'll continue to be in the news here today and probably scare investors to some selling, which could potentially bring some buying opportunities if there's some demand zones below current price. So let's get our options platform open and see if we can scan for some premium. We look at, the majority of the stocks are down that we look at. The big ones, Alibaba down 4%, Carvana down 3%. That one has been dropping, or actually going back up here this week, but coming off that supply zone that we had talked about, that's been tested twice, the $55 to $61 per share mark. So Carvana showing some volatility there and some opportunities for people that are trading that. Some other notables, WWE down 0.5%, 3M down 1.3%, Snap Fitness, Snapchat down 2%, Amazon down 2.35%. Nothing really up today. Tilray up 6%. Not sure why that is up 6%, but it is. It gapped down and went straight up. And BHG up 1.39%. Whoopity-doo. Oh yeah, we're going to look at some currencies. So looking at the currency market. Oh, I'm not to forget to mention here, Caterpillar yesterday. I think it was up 7% on the day. Let's just type in cat here. Caterpillar. Up 1.2% on the day, but yesterday it gapped up and it was up about 8, almost 9% yesterday. I don't know what the news was. Oh, they had earnings. Standardized a surprise of 0.97, 21% of a surprise on the good side for Caterpillar. So Caterpillar looking phenomenal yesterday. And really, they've been good for quite some time. In the lows back of September 2022, it's up about 80%. Now, we had some demand zones that it never even got back to. Back on the 180 mark, but it's at 290, so up $100 per share. So Caterpillar looking pretty good, very, very strong. And is that all-time highs? I think it might be. Caterpillar, I believe that's all-time highs. So way to go, Cat. All right, let's get our options chain open here. But anyways, let's go back to our currencies before we do that. So looking at the dimes, I believe we had the Aussie dollar in a selling opportunity and is continuing to go down to our minor hole of 65 cents. So that one looking pretty good. There is a demand zone at the 65 area. So for those people that are short this market, watch that. but doing what we were hoping it to do. The dollar franc, I believe, was in a selling opportunity and waiting to get up to the 89.25 mark. There is a couple demand zones right there as well, so that one looking good. Just wait and see mode. Aussie dollar also in a bullish bias, coming down to our hesitation line of 93.25. So wait and see mode there, but some opportunities potentially moving forward here with a couple of these currencies. New Zealand yen. This one is also a bullish bias coming down, and we're still about 100 and something pips away from our hesitation line of 85.76. New Zealand dollar just at our hesitation line right now, so opportunity for traders right now. Not a recommendation. This is entertainment. So I hope you, as my good friend Shaq once said, are you not entertained? So we have a hesitation line there, opportunities there. So let's go back to that's our currency market. Let's go back to our options market here and scan for some opportunities. Let's look at, GME, TLT, WWE are all in the negative on the percent Bollinger Band. This is just a scan that I like to do just to see where things are at. GME, okay. I don't see the volatility on that. I think we got to add that on here. Let's do this. Insert analysis technique, that's what it is. And we will put on the options IV gauge. Here we go. All right, so our IV on TLT, very low, probably not any meat on the bone. GME, which is GameStop, it's slightly going up a little bit. It's only at a 2, so nothing really on the meat on the bone there. WWE, I think that's been rising for some time here. Actually, let's peek at this one. I do like WWE here. I mean, it's been very, very bullish for quite some time, and coming down to the 9 period moving day average. So let's look at the option on that. See, so currently price is at 103 even, 103.02 to be exact. And let's look at the 44 days out. The 95s are given just over a little over 1%. Is there enough meat on the bone at 95? That means the market's got to go down roughly about 8% to get there. Potential opportunity for premium there, but I don't see any major demand zones. Doesn't look too appetizing to me. Delta Airlines, 0.7% on the negative. There is a demand zone in no man's land at the 43.28, 42.06 area. Let's check out, volatility is very low on this one as well, but let's check it out anyway. If we can get anything on the 40s, not even close. Well, that's a 16-day. Let's look at the 30-day, which is September 1st. And 42 is the only thing that's giving 1%. And, well, you know what? There is a demand zone there, but I'm not too excited about that. Market needs to go down 5% within that 30-day. That doesn't really, it's not too appetizing. Let's look at UNG. I don't think I want to touch that one. Let's see what the volatility is on that. It's a 3. And American Airlines top it out. Going through our demand zone that we had talked about. So as we talked about, there was a demand zone at the 1580 area. But going right through that right now. So we had a strike around 15 area. That's obviously not doing what we were hoping it to do. It's a good thing we didn't get into that one. But that, in essence, it's marked on our chart here. So those are some opportunities. I think there was one potential if you think that you have a shorter term demand zone. I believe it was on WWE. So a few opportunities that are out there. Keep track on this whole AAA to AA plus rating on U.S. debt. So that could continue to drop the markets, but it might bring some buying opportunities for people that might have that bullish bias of the market. So that being said, we have some good moves in the markets here. Continue to take your profits when they are given to you and protect your losses when they are small. Until next time, retire young, my friends.